Test. Hey traders, let's give it a couple more minutes. I see a few people are just stepping in now. My name is Jeffrey with Strategic Day Traders, and I'm going to give you a little bit of a background on how I view the Forex markets and trades that I take and put out in my Telegram group. But let's just give it another minute or two and see if we have a few more people jump in. And if any of you have any questions as we go along, just feel free to put it in the chat. So let's go ahead and get started. So as I said, my group is Strategic Day Traders, and I have a particular way that I look at Forex pairs, and that is following the parabolic movement. But let's go ahead and just jump in with our disclaimer first. As always, all the information provided here is for educational purposes only and is not an offer or a recommendation to trade futures, stocks, options, or Forex. So here's what we will cover today. I'm going to describe what I look for in price movement in the Forex and commodity pairs that I look at. And that's called parabolic price action. And then we'll go over the indicators that I use on my charts and the strategy. I'll show you what my Telegram signals look like, the kind of market moving news that I tend to follow, and then a couple of recent trades just to show you what those trades look like. And as we get deeper into it, I will start to combine trades that I've taken as examples and teaching moments, as well as some live trading. And before we dive into it, just want to thank the guys over at FinancialJuice. And sorry if we started a couple minutes late. The servers are over in the UK. I'm over in the US, so coordinating both sometimes is always a little bit of a challenge. So here's what I am looking at when I say parabolic price action. Parabolic is simply projectile-like movement. And if you look at the movement of currency pairs or currency futures and gold and oil, price typically follows a movement up to the extremes, a movement back down to the lower extremes, and then back up. Recognizing these extremes as points of entry and knowing how to target them, how to follow them, where to get out at high probability targets and following runners is the strategy that I follow when I trade my Forex pairs. This is what one of my charts typically looks like. You can trade on any platform. I use free indicators that for members of my group have access to my Google Drive. You can download the indicators directly if they're not already built into the platforms. Some are built into the platforms. For example, the Williams percent is in every single platform. This happens to be NinjaTrader. I also use MetaTrader or TradingView. Any of the platforms work. But on a typical chart, I like to keep it clean. I look for those extremes in price movements on the Nadaraya-Watson envelope indicator. Many of you may be familiar with that. When we see an extreme either to the outside long band or the outside short band, it is a very high probability that we're going to have a reversal up to the other side. When we couple that, when we combine it with extreme movements on the stochastic RSI to the overbought or oversold area, that is a second area of confluence to be able to take trades. And I always use supply and demand zones to look for bounces off in the direction that I'm trading. All of this occurs after I've done my analysis. I typically post my trade ideas at the end of the New York session before the Sydney and Tokyo sessions open, evaluating the news that's occurred through the day, the news that's coming up in the next few sessions. So I'm going to get a bias going forward for the next 6 to 12 hours, more or less, and then look for trades in that direction. I'm only looking for longs or shorts after I've already determined a bias, and then I will put out my ideal trade entries, which of course, as you're looking at the chart, you'll modify a little bit and base that exactly on what the ideal entries are, okay? So for my trade entries, we're going to enter either at market when I put my signals out, and I'll show you what those signals look like, or wait for a pullback to enter ideally. So for example, if we're looking at this trade right over here as a short, I might have price when I put my signal out might have been right around here. So ideally, we'd look for an entry closer to the edge of the zone and then a high probability first target right down at the opposite edge of the zone. That's what we're looking at over and over again. However, there are times that I don't wait for the pullback, that I will just enter at market, typically when it's already been overbought or oversold, or we have we have a combination of a few momentum candles. Then I'm not going to wait for the pullback and potentially miss the trade completely. I'm always going to be putting my stop loss behind the highest swing high or low previously, always behind a zone if I can find it, to be able to make sure that we have a sensible stop. And as I said, my first target is going to be an area of high probability at the opposite edge of the envelope. And then we'll have, I typically will trade with 2 or 3 targets and look for runners on those other targets and manage those accordingly. And I'll show you how I manage those as we show you some of the live trades. Here is what the channel signals look like. This is my Telegram private group. So I might put some screenshots in there when I'm pointing something out about a particular trade. Here are some trades ideas that I put out on this particular day, a few days ago, or last week, week before. And in this particular case, we had a number of longs and just one short. Sometimes it's just 1 or 2. Sometimes it is as many as 4, 5, 6. It depends on the economic news that's come out during that particular time. So this is what the actual post looks like on this particular day. You'll see I will have an ideal long entry or short entry, and that is typically going to be a pullback closer to one of the zone edges. And then I will give you a stop loss that works for me. And just to let you know, For Forex, ideally, the safest stop loss is usually one that's based on your risk management criteria. I don't like to trade just by lot sizes because if you have an appropriately chosen stop loss, then if you're trading full lot sizes, you could get stopped out for quite a lot. So I like to manage all of my trades for the total amount of risk that I'm willing to put on for the cumulative amount of trades. So let's say I wanted to risk with 5 trades, $500, then my maximum stop loss is going to be $100 regardless of where I put it. So I can put it all the way out where I feel it's best. And then I'll give you a high probability first target as well to be able to choose. Now we're always adjusting these over the first few candles, accounting for the spread as well. Just to make sure everybody understands, these are guides to your trading based on my analysis and my trade ideas, but it's not strictly a copy trading service. If you just enter these exact numbers over and over again, or just enter at market and walk away, you'll have less success than if you monitor those first few candles after I put my signals out, okay? Let's see, here is another day with some signals, and as I mentioned, you can either enter at market or enter at the pullback. The risks of entering at market are you might have some greater risk on the trade, slightly less profit, but you won't miss any of the trades because you're getting into every single one of them. If you wait for the pullback entry, there's going to be a greater profit potential, but you may miss some trades that don't pull back at all. And that's what I try to teach in these sessions, what to look for to get right in the trade, as opposed to waiting for the pullback if the conditions set up for a market entry. I'm always following the news in advance. I usually do a summary YouTube video over the weekend, and towards the end of that video, I will put out tables like this to show you what is coming up in the week ahead that we're going to be looking out for. And I'm monitoring this news. In this particular case, we had positive news for the Canadian dollar after this report. And sure enough, over the subsequent 6 to 12 hours, those were extremely powerful trades that we followed. And I'll follow the deeper information as well on the different econ sites, including FinancialJuice, and even give some links to important information. So, for example, yesterday there was an unexpected dramatic move in the market right about 6:45 to 6:50 Eastern time in the U.S. And just as I was getting into trades, boom! This was not around any news time. So a little quick search, it was easy to find that is when Trump tweeted or put out on his Truth Social, that is, the release that he was going to, on the inauguration day, institute tariffs. Well, that sent the markets reeling, extremely positive. For some currencies, extremely negative. So that's the kind of information that I'll share in my Telegram channel as well. Here is what a chart will look like that I am going to get ready to start trading. So, for example, on this EuroCAD trade, I'll pull up a EuroCAD chart. I'll mark these short entry or long entry stop loss and targets as I look at price. Here is where the signal was released, right around, in this case, it looks like about 7 to 7:30 p.m. Eastern. So as you can see, price was right around here, okay? I was comfortable with a continuation for this short bias, and I'm looking for a pullback to get in at 47387 with a target at 47130, just like you see over here. And here's my stop loss, well above just the most recent pullback, okay? Especially with 4 to 6 hour moves. We want to be able to give enough breathing room to this. And I'm looking at the condition of the overbought or oversold. So in this particular case, the EuroCAD, this is how the trade played out. And in fact, we had our pullback exactly to where we were looking for. So we got in at that 47387 just as anticipated, okay? Now, the entry was after a few candles and we came right down. But for me, these are trades that I will put on and let play out and hit that first target automatically. And then if the trade is still open, by the time I'm back in front of the monitor, my computer, I may follow manually with a runner, or I might have an automatic runner script on it to close it out at a particular point. So in this case, from that entry, proposed entry that we had before, we got our high probability pullback entry right over here. We were able to move down and grab our exit right about this area, the 47156, because by this time at 3 in the morning, that closed out. But we were still in a runner, and I was then manually pulling this down to make sure that we got the maximum amount. Now I'm going to show you this trade live. So here it is again. Here's the EuroCAD. Let's go ahead and start the playback. Okay, so as you can see, here is the projected pullback, and I'm going to put a limit order, usually a little bit below, just to make sure that we account for the spread as well. And as you can see, this is right about 8:30, 9:30, 10 p.m. now. And as we get closer to, let's see, 11 p.m. to midnight, we got our entry, and we're in for 2 targets. And now these targets are running automatically after we've gotten in. Our first exit is right down here at the end or the opposite side of the channel. You can see the upper end of the channel here and the lower end down here. And by the way, if there is a zone close to the channel on either side of it, then I'm usually going to put my targets or my stop losses close to the inside or the outside edge of the zones. So as we move our way down, as you can see, we're breaking through those demand zones. And now as the London session opens, we had a nice big move and looking to get our first target right down here. And beautiful. So we're out for our first target. And we'll squeeze that a little bit, and you can see we have another target. For the sake of this, I'm just pulling it all the way down, because in this particular case, my automatic trade moved to break even, and I was just letting it run. And by the time I got back in front of my screen, which is right about here at 5:36 a.m. Eastern Time, I'm now going to follow this with a runner, and I'll show you exactly how I do that. This white line here is the linear regression moving average, which I find works better than simple moving averages. And I'm going to usually pull my runner down just on the inside of that linear regression moving average. If we get a reversal, I'm happy getting out if it comes back up. But in this case, as we continue down, I'm going to keep pulling my target all the way down and then start moving my stop just inside of that linear regression moving average. Let's show that to you. And so let's see. Yeah, so in this case, we would take the stop right down here, drag it right down, and just trail it right down on the opposite end of the linear regression moving average. In this case, I was just outside of this demand zone. If I broke that demand zone, that was a great target to hit. So that is what we did on this particular trade. But equally, we could have moved that stop loss right down there, and I believe I'll show that to you on the next trade. So overall, we got in up here, got our first target down at 47,156, and then by morning time, like I said, 6 to 12 hours after the trade idea was put out, had our second target for a nice $400 or so trade on this €1 pair. Okay, let's see if we have another one. Okay, here we've got the pound dollar from a different day. And in this case, the trade idea came out as a short as well. And we're looking at following this short down. Ultimately, you can see that it played out beautifully. And we wanted to get a pullback to 27219. And that would have put us in right up here, looking for a move down to the opposite end of the zone or, of the envelope, or potentially even further. So here's how it played out. We got our entry. In this case, we didn't ever get the pullback. So let me just back that up. Okay, we were looking to get the pullback, but very quickly after I put the trade out, we saw 1, 2, 3, 4 short, solid momentum candles, okay? When a momentum candle, the body is greater than 50% of the total open to close of the candle, that's considered a momentum candle for me. So in this case, when I'm watching these few candles right after I put the trade out, I'm going to jump in at market. I don't want this trade to run away from me. And in fact, it may have closed right at the target entry, but with the spread, we might not have got it. So in this case, it was great to take the market entry and pull it all the way down. So that's where we got in, and then got our first target all the way right down here, and actually followed this back up a little bit and got our second exit for a runner just after this up bar closed right here. So let's take a look and see if we've got the replay of this. So here's how it looks on the release of the signal and the development of those momentum candles. So here is the ideal pullback entry, 27219. And the stop is all the way up here, just as it was in the other one. And so I'm watching these 30-minute candles for the next hour or two to see whether or not I want to get in at market, or just let the trade run and potentially get in during the rest of the Asian session or the upcoming London session. So we've got our first momentum candle. So now my interest is already peaked, and I'm looking over here to see if I'm going to get a turn down or a continuation up here to suggest that I may go for an overbought condition. So I'm not in yet. But as soon as we get a turnover on the stochastic RSI down here and a move into the lower channel of the Williams, coupled with these 3, now maybe 4 or so momentum candles, that is pushing me toward a market entry and not waiting for the pullback. And sure enough, we continued straight down, another down bar. And I'll show you how we enter that, okay? So that's what this indication for a market entry versus waiting for the pullback typically looks like for me. Same thing in the reverse for a long trade. So hold on, let's take a look. There we go. So here's the same trade, starting it back up again with the entry moves. And so here are our momentum candles. And we'll take a market entry right over here, as I said, and not miss the trade by waiting for the pullback, which barely came. Pull my target all the way down. And in this case, before the envelope has had a chance to recalculate and move down, which it will eventually, I'm basically looking for a one-to-one R to R. So I'll pull my potential target right down here, about the same distance as the size of the envelope. And as we move forward, you can see we had a little bit of a pullback. And then a continued nice move down. Ultimately getting our first target. And then staying in that trade well past 5-6 a.m. when the New York markets are getting ready to open. The New York desks all start getting manned at the banks at 8 a.m. Eastern Time. So look for those big moves at 8 a.m. And then again, some additional moves when the New York Open occurs for equities at 9:30. And in this case, here you'll see I pulled my stop down right on the inside of the linear regression moving average. So I will often use that to trail, and with every movement of the candle, and sometimes I'll switch to a 15-minute, rarely a 5-minute chart. There's too much fluctuation in the 5-minute, but when I'm trailing, I'll often switch to a 15-minute. And then as we get a reversal of that candle, if we get an up candle closing on the inside of the linear regression moving average, then we'll get stopped out there, and that really maximizes that runner. Okay, so in this case, you can see I'm just pulling my stop down on the inside of this linear regression moving average. We're well below it. We might break through this demand zone, or it might hold, and this might be the beginning of the reversal back to getting out of this trade. And in fact, if I remember correctly, we're going to get another up candle pretty soon. There we go. So let's just close it out on the, we can automatically close. In NinjaTrader, it's easy. You can attach it to the linear regression moving average and do it at the close of this bar. So if this bar closes above the linear regression moving average, we'll get out of that trade. And there we were right there. So overall, on our initial target, we had about 40 pips. And then on the runner, another 26 pips, it looks like. So we had about 60, 70 total, okay? And as you can see, when we had that turnaround and move back up, and this might ultimately go on to a reversal for the pound dollar through the New York session, we have an oversold condition right over here and a move back out of the Williams channel. As long as we're in the channel above or below, we tend to follow a nice long trend or short trend. So we were following a nice short trend all the way down here, deep in the channel. And as soon as we start pulling out, it may signify that we're pulling into the potential for a reversal or a long trend. So that is my style using parabolic charts. Guys, I haven't seen any comments in the chat box, so hopefully that is working. But I am free to answer any questions by all means. You can email me at jeffrey@strategicdaytraders.com. Take a look at the website. You can see information about joining the group. There is a free Telegram channel that you can just click and join, and that'll give you information, show you links to the YouTube videos that will give you summaries of the full weeks of trading. I'm doing 300-400 pips a week, 400-500, sometimes as many as 600 pips a week, because over the course of Sunday night through Thursday night, there may be 15, 16, 18, even 20 trade ideas to put out. Sometimes they don't all get filled. Sometimes there are a couple of losers. Everything is there to backtrack on. So by all means, jump in there. That way you can take a look at the history on the YouTube channel. And I hope to hear from some of you, and we will see you again in the next one. So good trading. Thanks for coming. And that is a wrap. If I don't see any questions, I'm not seeing any in my chat box. Let me double check and see. Hopefully we've got the chat working properly. I'm not sure that we do, but we will straighten that out for the next one. Let's see. Yeah, I don't see anything in the chat box, so there we go. Okay, thanks. I'm glad I saw. So thanks for putting something in there. Thanks for coming, and we will see you again. By the way, we're going to try to do these twice a week, Tuesdays and Thursdays, finding the best time. This Thursday, we will not have another session because it is the Thanksgiving holiday in the U.S., so it's a short week on this side, but we will see you again in the next one.